Hey guys, welcome back to Sky Talks Trading. My name is Sky and I'm on a quest to invest, and today's video is all about Nio Stock. Keeping with the electric vehicle stock theme we've got going on this week. Good news, Beijing has given the green light. Beijing has signaled to the world that investing in Nio is not such a risky decision anymore. Also, very solid deliveries in Q4, which is also obviously very bullish news. It's definitely not hard to justify a long-term position in this stock. Like I say, it's a long-term play. So yeah, the latest political developments in Beijing suggest that Chinese car makers, which listed shares of their variable interest entities on foreign exchanges, will be able to continue operating their businesses as usual without stressing about further oversight from the state in the near future. Or the foreseeable future. And because of this, Nio Stock, which has been in decline for pretty much the whole of 2021, has very good chances of a nice rebound. So I would say, even though of course I'm not a financial advisor, but if you're looking for a nice entry point into Nio, I think now could be a good time. I know that back in November, Nio was underperforming against its competitors, and it was having definitely a bit of a struggle to reach the same growth rate of deliveries in comparison to its domestic peers. That being said, things are definitely changing. The sentiment is turning more bullish for Nio Stock. You know, we've got Chinese regulators clarifying that there's no plan at this stage to ban the use of VIE structure, which companies such as Nio use to access foreign capital markets for the existing businesses that are already listed overseas. Secondly, and even more importantly, China has scrapped limits on foreign investments in its auto sector. And then just a couple of days ago, Nio announced its Q4 delivery numbers, which were much better in comparison to the rather weak delivery numbers of Q3. Despite delivering only 3,667 vehicles, this October, Nio managed to quickly retool its factories and delivered a total of 25,034 vehicles in Q4, making over 10,000 deliveries in November and December. So that is quite a jump, quite a comeback story. So going forward, I think it's pretty safe to assume that investors should expect a greater increase in monthly and quarter deliveries for Nio. They are dealing with the ongoing chip shortage pretty successfully. Feels like we've just been dealing with this chip shortage forever. And they are about to launch 2 new flagship electric sedans under the names ET7 and ET5 later this year. So due to the massive depreciation of its shares back in 2021, not back in 2021, it was just last year, it was just a few weeks ago, Nio now trades at a forward PS ratio of 9x, which is below the forward PS ratio of its competitors such as XPeng and Tesla, which trade at 14x and 21x respectively, their forward sales. Whilst that's all good and great, I'm not saying it's completely risk-free. I mean, nothing in life is, waking up in the morning has inherent risks. No, sorry, that was a bit much. What I want to say is that even though the Chinese regulator said that it has no plans to ban overseas listing through the use of the VIE structure, it doesn't mean that it won't change its mind in the future. They're a little bit unpredictable. Due to the fact that the Chinese legal system is not as developed in comparison to legal systems of Western countries, various Chinese regulatory agencies could change the interpretation of the law at their own discretion, which would leave many investors with a lot of uncertainty about the state of their investments. That's why nothing has stopped China from forcing DD stock to delist from the US exchanges. And, the same fate could await other Chinese-based companies as well. Even Nio itself stated in its F1 filing back in 2018, that is back in 2018, that feels like a century ago now, that there is a risk that the Chinese regulator at any moment could say that its contractual agreements with its variable interest entity are illegal. Let's do some technical analysis, shall we? So we have broken through kind of an important, I would say substantial support line here at around $32. And we've got a new support line at around $28. And we're probably gonna, have a sort of an accumulation phase through this channel until we see a trend reversal. But definitely, not definitely, but in my opinion, I think we will go back to all-time high, possibly even in Q1 of this year. But I want to know what you guys think. Let me know in the comment section below. Thank you so much for listening, guys, and I'll talk to you soon. Have a great day.